Well, the fourth quarter numbers are basically going to tell us where we were, but a kind of a setup for the first quarter. We've seen some good numbers in terms of consumer spending so far. Basically, all we have is January. But this tells us that we had a higher base going in, and more money was spent than we anticipated. Now, I'm looking at non-residential fixed investment, and for 2023 comes in at the end of the fourth quarter at 2.4%. That's up from 1.9. So businesses and governments spent more money in the fourth quarter than we anticipated, which is interesting. We must have had, and I haven't gotten to that yet, a decline in inventories or something like that, which is what people are going to be watching. The price numbers, as I mentioned, are important tomorrow because they tell us what it was in January. And of course, we had that surprise with CPI. The numbers that we see for the fourth quarter are nice, but they're close to what the Fed wants, but they're not telling the Fed what it needs to know about where inflation is. We did get a couple of other numbers that will figure into GDP for the first quarter. Retail inventories up 0.5%, which is more than anticipated, down from 0.8 in the fourth quarter, or in December rather, and wholesale inventories were down 0.1 compared to a 0.4 rise. So maybe they kind of offset each other, but they do show a little bit of a slowing in inventory builds so far. Again, only January numbers, but with the January numbers we have as of yesterday, Atlanta Fed GDP now was running about 3%.
And it's going to be the first time that you're seeing it run above 3% pretty consistently for a number of consecutive quarters going back several years. I'm just looking at this and thinking a lot of these surprises are in the same direction. Even though you want to say that January is messy and all this data doesn't matter until it matters, it's all trending with inflation not coming down as quickly as people thought. Is that giving concern to the 15 Fed speakers who are speaking today and tomorrow?
I don't know about concern. I mean, they have argued for a long time that it's going to be a bumpy ride. I do think that the strength of the economy has surprised them. They expected their rate increases to slow growth more than it has been. Some interesting conversations about that lately. Larry Summers and company wrote a paper that they put out yesterday on the NBER suggesting that people's attitudes are based on the fact that interest rates are high, but they're spending because they're not taking out loans, they're using what they already have. And John Authers today for Bloomberg suggests something similar, and that the difference between what people are paying and what people see the cost is contributing to concerns. And because the costs that they actually have to pay aren't really higher, companies are still spending. And so the economy keeps going, and that may be taking the Fed a little bit by surprise as they get ready to speak. But again, I go back to the fact that what they say this afternoon, all these Fed speakers today and tomorrow, will not matter all that much because Jay Powell speaks on Wednesday of next week at Humphrey Hawkins.
That's right.
And that's going to be the event where all the bond traders got to be sitting at their terminals and readjusting their thinking.